Yeah, I mean, that's the heart of the matter, and that's what we've been delving into. So if you look at how the analysts have reported on it and what the fundamental agreement, which Intel made public this morning, say, frankly, the money is kind of money that they were lined up to get anyway. What's good for them is arguably that they're no longer tied to this program where, hey, we have to build a certain amount to get a certain amount of money. So that's good. So they, in theory, according to the agreement, they can use this money for whatever purpose they need it for. But in terms of the actual amount, in terms of their requirements to be what they really want to be, no, it's not enough. $8 billion is a lot to you and me. But for Intel, when you're building a plant that costs more than $20 billion and is obsolete within 5 years, it's probably not enough to completely change the picture in a way that I guess investors would want.
Mm-hmm. Ian, how would they use this money differently, especially, if they're no longer tied to the CHIPS Act?
Yeah, I mean, we don't know is the answer to that because they haven't said, and I'm guessing that they're going to be very careful with what they say. What the US government wants is this giant new chip plant in Ohio to go ahead, right? That's what they want that money to be. They haven't said it explicitly, but that's been the push. What Intel wants and what Wall Street wants is what the CFO said, which is our balance sheet is not in a good position. We need to do something about that. We need to focus on that. We need to improve our designs. We need to improve our manufacturing technology and play catch up. But there's a gap there, right? So we'll have to wait and see. We'll have to hear whether there were some kind of background agreements and understandings put in place. But so far, based on the black and white, they can use it for whatever they want.
The president, Ian, saying in the soundbite we just heard, quote, I just made $10 billion, $11 billion for the U.S. That's just part of what he said in the Oval Office. I know we don't completely understand how this deal works, but as the U.S. government being an investor in this storied U.S. firm, we'd only, and I'm speaking as the U.S. people, right? We, yep, as Americans would only make money if we exit that investment at some point. Certainly there's dividends, or potential for dividends. Certainly there's appreciation, potential for appreciation. There's also downside risk here as well. How does the U.S. government and therefore the U.S. people make money on a deal such as this?
Yeah, no, that's a very good question. I'm a taxpayer too. I want to know. So first of all, there's no dividends. Remember, Intel, because of its financial situation, stopped paying dividends, which is not something that obviously investors enjoyed particularly, and they're suspended until Intel's finances improve. But yes, you're absolutely right. The only way that you and I as taxpayers make money out of this deal is if Intel is able to turn its fortunes around and investors get behind it and the stock price goes up. Right now, we've bought a chunk of a company that is not in the greatest position and nowhere near where it used to be.
So what does this mean for not only Intel, but other firms and potentially the idea of the U.S. taking a stake here in Intel? What is the broader read-through here?
Yeah, well, the broader repercussion, and I think the derivative here is what Intel needs more than anything else are customers, outside customers. Right now, basically, the main customers for all of these expensive factories are its own products. Intel's big push, and the reason why I wanted to spend so much money was because we want outside customers, because we want Nvidia to give us orders, because we want AMD to give us orders. So far, that just hasn't happened. So what's going on behind the scenes here, and what we're hearing is that, at least from the analyst reports, is that unless Intel can get these external customers, as it said itself, unless maybe Donald Trump, who's very good at deals apparently, can get Nvidia or get anybody that's a major chip maker to give Intel these orders, then really not a lot has changed. So again, it's horrible to keep saying we don't know, we'll have to wait and see, but I think we need a second or a third act in this whole arrangement for it to be really meaningful for Intel.
Okay, you said Nvidia, so that's where we're going now, Ian. It's the world's biggest stock. It makes up 3% of the global market cap of all public companies. It's a shocking stat to think about. The remaining 97% comes from 82,551 stocks. That's just how big of an impact Nvidia has on global markets. What do we need to know ahead of Wednesday's report?
Yeah, I mean, what I would say is the impact is even greater than that. If you look at the S&P by size of companies, the next 5, 6, 7 companies, which, stick them all together and they'll look almost to a quarter of the value of the S&P. These are all related to Nvidia. They're all AI stories. They're all related to either the companies that are spending on AI or companies that are profiting from that spending on AI. So what Nvidia can tell us, whether spending is still strong, whether demand is still strong, whether AI is spreading throughout the economy, is absolutely essential to an even bigger part than Nvidia represents itself. And I think that's why people are so on edge and so focused about this in terms of what Nvidia can say. Of course, the story is, are we still spending? Are we still growing? I mean, growth is, I was looking at the numbers, growth is probably going to slow to 54% for this projected quarter, which, oh dear, that's horrible, right? But, because last quarter it was 69%. So that sounds like a slowing, but you've got to remember it's on course this year in terms of revenue. If it hits the targets that Wall Street set for it, it'll be basically a third of all sales of semiconductors worldwide. So, I mean, the numbers are just, we could go on and on all day, but what people really want is this fundamental confirmation of, hey, everything's okay, people are still spending.
Hey, Ian, valuations for many AI firms are at nosebleed levels. Essentially, that's how a source from the story that ran over the weekend from our colleagues Carmen Reinecke and Jess Minton said from Stewart Partners here. Are expectations high heading into this report? What is this really going to illustrate in terms of the broader AI scope, really?
Yeah, I mean, valuations is something that obviously the market decides, right? What they're comfortable with, what levels they're at, and obviously we can look at the percentages, the PE ratios, and the projected. But for us, I think the best way to look at it is how fast has this company come? Has it justified this big run-up? We've not seen anything like it in terms of the valuation run-up, but on the flip side of it, we've not seen anything like it in terms of run-up, in terms of the revenue, in terms of the profitability. This year, it's going to have a net income on a GAAP basis of $99 billion, right? 3-4 years ago, total revenue, when it hit $25 billion, that was a victory lap. So this is unprecedented territory. So can you put a normal valuation on that? I don't know. You decide. It's for the investors to decide. But the numbers that it's projected, and if it can continue at this pace, and it looks like it is, then I think we're in a territory that hasn't been explored before.